Hi, I'm Roy Robertson. This is Good Business San Diego. This morning, we welcome back Jim Bottrell. He's a former U.S. Marine and the founder of the Jim Bottrell Real Estate Team with eXp Realty. You can reach Jim at 1-833-600-SOLD, and he's online at jimhasthebuyers.com. So, Jim, let's start here. You see this downturn in the pricing, and some people, maybe rationally or irrationally, you tell us, are starting to fear that this is the sign of a market crash. What do you say?
Well, I say that we've had a significant decline. We've gone about 10 or 12% down since May. However, I've been doing this, in real estate for a very, very long time. This market shift is a lot different than anything we've ever seen before.
So what makes 2022 so unique?
Well, you may remember that I mentioned here back in May, I said that once interest rates start to go up, which I've been hammering interest rates forever.
Yep. Mm-hmm.
Once they start to go up, you're going to see a lot of investors bring a lot of markets to property. Well, or a lot of properties to market. The top of the market clearly happened when interest rates went up, and those investors did exactly what I said they were going to do. Is they brought a ton of properties to the market, and they flooded the market at the same time interest rates were going up. And unfortunately, what that did is that was a big double whammy to the market, because the interest rates were artificially increased at a rate that we've never seen before, by the way. At the same time, the market was flooded with all these extra investor unwanted properties. And that combo hit in June, and we started to see the effects of that in July. And then it impacted us hard in August. Now, interestingly, in September, we saw prices level out. And I was thinking, things are looking good. Maybe we're going to have a nice soft landing on it. And then what happened in September? The Fed hammered interest rates again. Yeah. And so now we're waiting to see how October plays out. And that's why this market shift has been so interesting. The decline in prices has been 100% not from a lack of demand, because there's a ton of demand out there. It has been 100% because the Fed has been artificially increasing interest rates at such an amazing rate. And that increase in interest rates has prevented that demand, people from buying houses. And that's what's caused the prices to go down.
So let's look at the bigger picture long term, because the Fed's still talking about raising rates. So are we in for a repeat at some point of 2007, 2008, or are we going to be okay?
No, the 2007, 2008 is not on the table. But we do need this Fed to just stop hammering interest rates, because once they stop hammering interest rates, the market's going to stabilize. Because this, as I said before, this decline in prices is purely artificial. And it's artificial because mortgage interest rates from last December have tripled. And that has just caused the buyers to just say, I can't afford it right now. And once the Fed stops doing that, I think that the market's going to stabilize pretty quickly. I do have a caveat to that, though. If we end up in a deep recession, there's no safe harbor, right? We'll see prices to continue to decline.
Yeah. Not the most optimistic scenario there, if that does happen. So what is your advice for people moving forward in the current climate?
Well, for sellers, I have to say that you're not going to see any appreciation for a while, probably a couple years. There's a lot of sellers out there that want to move, and I'm just going to say do it now. And for those people that have their houses on the market right now, that they've dug their heels in and said, I'm not accepting anything less than that. We're just waiting for that one buyer to come along. Like, you got to realize your housing price is not going up right now. The market is not coming to you. So just, the good news is that your home, you're still up. Your house will sell for more today than it would on January 1. You're still up. Focus on that. And if you're going to sell, and you're probably going to buy a place and you're not going to rent. So, right now, interest rates are lower than they're going to be later on. So do it now. Yeah,
you make a good point. More value than January, and certainly the run-up in real estate prices over the course of years and years, too. So anyway, find out more. Thank you, Jim. Jim Bottrell, 833-600-SOLD. That's 833-600-SOLD for a complimentary consultation, or jimhasthebuyers.com.